He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Well, an unexpected turn of events, although I knew Rob was coming, an unexpected turn of events that I ambushed him with a podcast just as he sat down with his Tim Hortons cup of coffee. He's back in Canada from Florida, okay? Now, for those of you who don't know, and I would hope like hell everybody knows you, because this is a mortgage brokerage insider feature that we're doing on Angry Mortgage today. Rob McLister is just absolutely the authority on the mortgage business, the top reporter on the mortgage business, particularly in the broker channel. Now, Rob has a fantastic newsletter Substack. We call it Substack? Is that what we should call it?
News Bulletin.
News Bulletin. Okay. Mortgage Logic is without question. Look, if you're going to be a professional in this business, whether you're on the lender side of the mortgage brokerage world or whether you're a mortgage broker agent, if you're just working out of your basement part-time, you don't need this, okay? But if you are planning to be an actual professional in the mortgage brokerage business, or you're a lender person who wants to be in the know about what's going on in the industry, Mortgage Logic is a must subscription, okay? It is, every time it comes up, about 3-4 times a week it pops up?
Yeah, 4 to 5 now.
4 to 5, yep. Every time it pops up, boom, I'm right there. It's the first thing I open, read the stuff. Rates, trends, new developments in the mortgage industry. This is it. This is the best you can get.
Well, listen, man, I appreciate that very much. Very excited to be on Canada's #1 mortgage podcast now.
Oh, no, it's not. It's not even close. No.
Wait, who is on top of you for mortgage podcast?
There's a guy out in Calgary who's like profoundly boring. Okay. And he has a book of mortgage secrets. But he's far ahead because he's been doing it for like 2 or 3 years now. And there's some guy with like a bowl haircut. He looks like Prince Valiant. Like, I'm the only guy. Do you know who Prince Valiant is? Like, you ever saw that movie, that old black and white movie? No?
No.
Okay, so this, just picture, okay, you know who the Beatles are though, right? You saw the Beatles. Yep. Imagine an adult man with those bangs that the Beatles had, okay? So.
And this guy's on top of you with the bad hair and all.
Listen, it is what it is. Like, this is, I think we hit episode 5, so we're late bloomers to this thing. But yeah, there's bigger podcast audiences than we have. But
well, I am very happy to be here. You got quite a operation here, man. Looking around, oh my god.
Yeah, it's and still to do TikTok, you have to try to tape the halo. You have to tape the phone to the halo with Scotch tape. I mean, like, it's not as good as we're not as organized as we look. That's for sure. But anyway, Rob's here today, up from Florida, and really, like, I'm not just pumping this Mortgage Logic bulletin system. What are we called again? Not a Substack.
It's bulletins.
Bulletins.
Let's go with that.
Look, subscribe to Mortgage Logic if you're serious about the mortgage business. Like, honest to God, just subscribe, because you get to find out stuff that other people don't know. Like, and you're the one. It comes to you find out first. Like, Rob announced BMO coming to the market in all likelihood into the mortgage space.
Got more on that soon.
More on that soon. Like, I mean, seriously, like, everybody's been talking about that, whispering about that, rumoring about that, muttering about that for, 2 years now?
It's been a while.
Been a while, okay? And yet, Rob gets the scoop. Rob knows the real truth about how things work out. And that's why you need to subscribe to Mortgage Logic.
Well, thank you, sir. I appreciate that.
It's just true. If it was shit, I would say it. You know me by now.
I do.
We've known each other a long, long time. Okay. Okay, right. For mortgage brokers, we're on you're going to see this. The Bank of Canada increase would be long in the past. But it's last week, the Bank of Canada raised rates. unexpectedly. Is it fair to say unexpectedly, or 30, 60, 40?
45% probability coming into today's meeting.
Now, I think what's interesting, if I looked at your last social media post, your position is that fixed rates are going through the roof because bond traders believe there'll be another one. Is that a fair statement to make?
Well, I guess it's relative. So what's going through the roof? I mean, certainly yields up, 5-year yield up today. Last time I looked, 21 basis points. That's significant. You very rarely get a move like that in one day. And, the bond market kind of takes a little time to process all the information. So you'll probably see that, that incline keep trending up. So I don't know how far it goes. I mean, we got a lot of data coming out this month and before the Bank of Canada's next meeting, so a lot can change. But suffice it to say, if you need a fixed rate in the next 4 months, you better lock something down if you don't have a lock already.
Yeah, I mean, even prior to the Bank of Canada announcement, in the run-up for the previous 2.5 weeks, we had hit bond yields we hadn't seen since 2007. So that's significant, right?
Yeah, I mean, the 2 years running up pretty good. 5-year hasn't broke.
This 5-year looks like about 2007 territory now.
Hasn't broke its October high yet last time I looked, but very good probability that it might. And that is something that very few people expected after the U.S. banking debacle in March.
Oh, hell yes. I mean, when we look back to March, there was some conventional mortgage rates, 3-year fixed, like 4.59. That lasted for about a week, but that was available, right? We saw.
Yeah, I mean, you saw 5-year insured down to 4-4.19 in some cases. Was that you, by the way?
That was me. That happened to be me. Right. And strangely enough, that was Butler Mortgage. We had the lowest rate in Canada for about 5-6 weeks there on the 5-year CMHC mortgage. But it's all gone. It's gone. And the specter of another 0.25% increase all of a sudden is it's not definitive, but it's real. The possibility becomes real.
Oh, the market heavily pricing in another hike by the end of the year, yeah.
All right. So just for people who, like, this broadcast is really meant for, podcast is meant for mortgage professionals, but just for the general public, is it fair to say that the issue with fixed rates is that when the Bank of Canada does this somewhat unexpected move, priced in on the bond side, but 21 out of 23 economists said there's going to be no change. So there was, amongst the big bank economists, was there one guy who thought they might go, but everybody else said no?
Yeah, I want to say there's at least like 3 or 4 who expected a hike today. But, the economists are always behind the market, almost always behind the market. Yep. Right. And so they see the market pricing in a hike, and all of a sudden they jump on the bandwagon. And that's just the way it is. I mean, the market's smarter than people.
The bond market's smarter than people.
And that's not saying a hell of a lot, because you and I both know how wrong the market expectations can be.
But then again, the truth of the bond, we call it the bond market, but the truth is it's about who do serious weight in trades. It's really only about 8 guys in front of Bloomberg machines, right? Is that fair? I mean, there's probably 50 or 60 who trade some Canada bonds sometime in the world occasionally, but the heavy lifting is probably about 8 guys in front of Bloomberg machines.
Yeah,
and there might be a couple of gals, so I don't mean to be a sexist bastard, but like there's 8 folks in front of Bloomberg machines. Is that fair?
We're not talking the U.S. Treasury market here. I mean, Canada's fixed income market is a pretty thinly traded market relative to the U.S.
Right. So that's what this bond market is. We keep talking about a few people in front of Bloomberg machines trading bonds, right? Selling and buying and selling bonds.
Yeah, it's a relatively small number of people that can really swing overnight index swap expectations. And OIS are probably the most referenced indicator for where mortgage rates are going, Bank of Canada rate. Okay,
so I put out a bunch of TikToks and tweets about the end of the world, the end of mortgage world. I mean, because it's exciting. You don't get days like this that often. It is an exciting day, but let's just move into what's really probably going to happen, because getting back to the bond market for a second, it's all about, if we just sum it up for the layman, is it fair to say it's all about when the cuts start? Is that a fair statement to make?
Well, that's certainly on most floating rate borrowers' minds.
But I'm also talking about the fixed rates as well, because when these 8 or 10 or 12 folks who are in front of their Bloomberg machines finally decide the cuts are coming for sure, that's when we see changes in the bond yield. Is that a fair statement to make?
Yeah, I mean, but we saw expectations get priced in for cuts already.
100%, yes.
Changed radically. Remember, I wrote not too long ago, the market was looking for a couple cuts this summer once we had
absolutely true. Yes.
What hit the fan in March. And so, we can change on a dime. The market expectations can change.
We just saw it today, in the last 2 weeks. Yeah.
Yeah. So once the market truly believes that, the Bank of Canada is going to pivot to a cut cycle, then you're going to see, 5-year yields break that floor, that glass floor that they've had for many months now. And it won't happen until then.
But that's the key. The key is the moment in time when central bank cuts become so obvious they're factual. That's the right statement to make, isn't it? That's the moment in time when things change.
Yeah, and it's always...
Because the cuts will happen someday, right? Someday they will happen.
Oh, 100%.
It's not going to be infinite.
Yeah, economies are cyclical.
Yeah.
But the thing is, we saw 100% cuts pricing already reflected in the market, and that changed radically, much to people's disappointment if you're a housing cheerleader. And so it could change again.
So I never do this. I never do this, but I'm going to do it this one time. This is the first for the show. This is the first for the show. It's going to be on Twitter tomorrow. I have been saying the same thing for a year, is that people should not take a variable rate because I'm old and, there may be a certain amount of dementia creeping in at some stage, but I'm old and I like simplicity. So I said it didn't make any sense to take a variable rate because you were taking at a very higher price than short-term fixed. And you were also wagering that it was going to come down for sure. And you were taking on the risk of the increase. Boom! The increase happened. Butler's right for once. Okay. So anyway, I did that. I promised I wouldn't do it. I promised myself I wouldn't do that shit because I hate when I see it in social media. Oh, I'm right again. Okay. We've seen that many times. A lot. Right? Okay. But yeah, I was right about that one. So, all right, moving on. Now that we're seeing this obviously hawkish move in rates, what happens to the Canadian housing market? Because in certain regions, it just took off in April, May, right? We saw it. We saw the data. The data's there. Prices went up. Unit sales went up.
Well, certainly the foot comes off the accelerator, right?
Mm-hmm.
And we saw one hell of a rebound here so far from the beginning of the year.
Yeah.
And a lot of that was expectations fueled. The Bank of Canada is on pause, long pause. Turns out that it was only a 4-month pause.
Mm-hmm.
Yeah, if I'm a guessing guy, I would say that near term, you're going to have a spurt in mortgage applications. I think you're probably seeing it today. But a little further out, you're going to see some slowing because obviously it's harder to afford the mortgage payment. It's also harder to qualify for a mortgage, assuming you're not, paying more at a credit union or a non-prime lender or whatnot. So, the ultimate determinant for housing, I think, is going to be the employment market. Certainly the ultimate determinant for mortgage arrears, people defaulting on their mortgage. And, it's unbelievable how long unemployment has stayed around 5%. But that won't last. We know it won't last. These rate hikes will accelerate the time between now and when we see unemployment start ticking materially higher.
Yeah. You and I spend a certain amount of time every day reading other people's ideas about this stuff. And one of the things that I have found very consistent is there is a big cadre of economists who are 100% all in on a recession, whether it's in the fall, Q1 next year. But when you read some of their comments, it's like it's already happening. Like it's that degree of certainty. How do you feel about that?
Well, high degree of certainty that we're going to get a recession if you believe the yield curve, you believe all the central bank indicators and their outlooks, And so, look back in history, right? You look at the, when at times when the leading indicators are as low as they are. You look at times when the 10-year, 2-year is inverted as much as it is now. There's a high probability of recession, period. Does that mean we're absolutely going to get a recession? No. Maybe we get the mythical soft landing. And
stagflation?
Maybe we get stagflation. But suffice it to say, there's going to be less inflation in the future. We just don't know if it's going to be, if we're going to get down to the 2s by the beginning of next year. Maybe it's pushed out longer. But the Bank of Canada is making it very hard for people to borrow money, and that makes it hard to spend money. And barring some type of a shock from overseas, most likely we're going to see a significantly lower inflation by next year.
And every single renewal that's occurring in the next 3 months is at a significantly higher rate than people started with. That's a fair statement.
I would say generally that's true.
I think it's like 100% true. If you think back on the vintages of the 5 and 3 year situations, the years 3 and 5 years ago, I mean, because let's face it, we go back to, what are we going back to? 2023, 2018. 2018 was almost all 5-year stuff. That's a fair statement to make, right?
Majority.
5-year variable, 5-year fixed, all coming up for renewal, all facing big increases. Well, not the poor people who had variable that went up with every payment. The 15 or 20% of the Canadian mortgage holders with variable mortgages whose payments have risen consistently and have risen today, by the way. They've gone up again today.
About $14 per 100,000, give or take.
Yeah, and some of those, Rob was a long-time mortgage broker, been in our industry forever, but you've been outside of the mortgage brokerage space for a little while. God bless you. That was maybe your smartest move, was to escape from mortgage.
Well, I can't compete with guys like you, man. You're cutting it to the bone here.
Shit. I mean, like it's hold it. You escaped the era of the venture capital rate discounter. So you missed out that thing completely. Thank God, right?
Yeah,
like
I missed out on a big paycheck apparently.
Well, yeah, yeah. there was one really, really big payday. That's true. But like, it's crazy, Rob. Like the amount of money these people spend on advertising is still, it's
still a drop in the ocean.
It's a drop in the ocean. But if you're a guy like me, or you're Dan Eisner at True North, or you're James Laird at Rate Hub, it still grabs a little bit of business away every single time. I mean, just the presence of them constantly advertising. And by the way, just for the audience who doesn't understand what we're talking about, these are companies, direct-to-consumer companies, several of whom have opened up their own CMHC, NHA lenders, who they advertise. They advertise low rates, or sort of low rates, or kind of low rates, but they're present. They're very present in the rate system, and they just grab a little bit of business all the time. So.
But I mean, you have been advertising a long time. You spend a fair bit of money advertising. You know how hard it is to generate significantly greater scale through advertising. Right?
Well, I didn't spend $25 million in 1 year like Nesto. Holy shit.
But even if you spend, $50,000 a month, which is a lot of money. I mean, what is that? More than 99.9% of mortgage brokers.
Yeah, that's correct.
To scale your business to multiple billions against the big 6 banks, or even big credit unions like Meridian, for example, that's a tough road to hoe.
Meridian, Coast Capital, Van City, yeah, even the big credit unions are very, very present everywhere. It is a tough road, and I think that Nesto's blown through $100 million trying to get there. So
yeah, they got a good ATM machine. I want to find one of those, and figure out the password for that ATM machine. Because
password, I know the password actually. The password is Desmarais. The Desmarais family is the password to that ATM. That is exactly what it is. So, but God bless them. I mean, they're out there, they're working. They got 300 employees or some unmanageable number.
Nesto is one of a few, I would say a handful of online mortgage providers in this country that I feel confident will be here, 10 years from They are very well run. Yeah, they spend a lot of money, but they're a big operation and they got a long-term plan. I worry about
the long-term plan is called the Demeray family. But anyway, go ahead.
I worry about some of these smaller outfits, and specifically the more commoditized type. Okay. And I worry about where they're going to be, and I worry about their ability to attract more capital. It's hard to compete against the big banks. These banks are spending billions and billions on marketing. So listen, I think that the real interesting question, if we're kind of shifting on to this whole topic about these online mortgage providers now,
and the future of mortgage providing. Yes,
yeah,
absolutely.
The real interesting question is what happens when I can go on Chat GPT and say, I've got great credit, provable income, I'm a great qualified borrower. Who has the best mortgage for me? I want, lots of prepayments. I need portability, blah, 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 right? And this Chat GPT powered app looks in its big database of lenders and rates and says, oh, you should call Butler Mortgage for this specific product. You should call Bank of Montreal for this specific product. These are your top 3 options, right? When it's that easy, you have people going to this type of application and calling mortgage advisors less frequently. And I think you're going to see a big shift to this over time. And I don't know if it's going to happen in 2 years from now, next year, 10 years. I don't know, but it's going to happen.
Well, you and I both bet on the phone. Like we said, I remember vividly over the years at different mortgage conventions, we've held up phones and said, this is the future of the mortgage business. And people have said, you're full of shit. You still have to meet with people, sit across from a kitchen table. And obviously the phone won. I mean, like at the end of the day, the phone won. But no, mortgage brokers don't see clients anymore. That's for sure. That's maybe 5% of all situations. But that move to a real completely online scenario, it's come more slowly than both of us thought. I always attribute that to the fact that unlike travel, which you look at every 3 months, you only look at your mortgage every 5 years, and you just are not quite as comfortable. You just really feel you want to have some help. But your position is 100% right. Like if we have a better way to communicate mortgage information, to answer mortgage questions, a more efficient way, more effective way, and it's highly automated, people are going to use it sooner or later. I mean, they just are.
And the thing that attracts people most is that I don't have to get a sales pitch from a computer.
Absolutely.
Right?
Yeah.
I don't have to, what's your credit score? How long have you been at this job? Blah, blah, blah. And like this, all these personal questions. For some reason, a lot of people feel more comfortable typing that type of stuff into a computer than actually telling someone on a phone.
Yeah, that's true.
And so, there's these barriers to providing information that'll be torn down, I think. And then just faster and easier.
And you always wonder what's going to happen to Google search if people start just using voice. If people just yell out at their home computer speaker, hey, Alexa, what's the best this mortgage? And how that's not, Google search is not going to interfere with that. They're not going to be involved.
It's going to be interesting. I think that you're going to see more concentration at the top from the most tech savvy players because people aren't going to be going to the second page of Google anymore to find the best mortgage rates.
Exactly. So that's actually, as an aside, that's actually why I'm like doubling, tripling, and quadrupling down on social media, because you got to try to create a voice that stands out from that crowd. Now, as Dan Eisner, who quite correctly said, and he was right, he talked about this social media approach. And he said to me, Ron, it's working very well, because he actually put on a presentation where he said, like, in some ways, Butler does better on application response than other people are spending more money. But he wisely pointed out that, well, Ron, when you're dead, they're going to run out of recordings of you in this. They're going to run out of this social media thing. So it's a completely individualized thing. And of course, he's right. But
should just tape a whole bunch now.
Yeah, just do a ton now. All generic, like non-specific. But the truth is that there's going to be some young people who are going to do really well, who've got a long runway, who are going to do really well in social media, because social media is not going away. It just seems to grow. That's the truth. As bad as Twitter is, utilization keeps inching up. TikTok is still, it might get banned eventually, but something will replace it. Yeah. It reaches a crazy big audience, and it just is.
But there too, the leaders will lead, right?
Yep.
Like, I mean,
Yep.
Looking at this operation here, this is serious. I mean, your average, TikToker doesn't have this, and your average TikToker doesn't have your experience, and the humor element, the entertainment is half the battle, right? And the swearing, does that get you more hits? The swearing?
Oh, the fucking swearing is critical. It's absolutely fucking critical. You got to have it. If you don't have it, it won't work.
All right.
Simple as that.
I gotta drop some more F-bombs, I think, to get my readership up. But
look, I just learned it. I just learned it like everybody else learns everything about a podcast. I just learned it from Joe Rogan. I mean, you just go to the number one guy and say, what's he doing? Like, I can't do the jokes, and I can't have all the guests, and I don't have, but I can swear, like Rogan occasionally swears. So
that is to say that the people who do this really well on the social media side are going to have a disproportionate influence because more people will go to them. And so again, it's going to be a lot harder, I think, to market, not only social media wise, but SEO wise, content wise. I mean, now I can write you a hell of a story in literally like 10 minutes about the whether to go fixed or variable. And that's going to, that ease makes it more competitive and makes the market more efficient. And, I don't know if you're at that conference way back when where I said half, the brokers in this room are going to be out of business in,
I was there.
5 years.
I was there. Yeah,
okay.
I was there because I didn't hear you say it, but I was wandering the hallways later that afternoon. I had a lot of, hey, do you hear what that fucking McLister said? I had that. That absolutely happened. Yeah, that did happen for sure.
So I meant to say 15 years, but anyway. But I get reminded of that quite a bit. Listen, the bottom line is no one's smart enough to predict when big changes will happen, right? I sure as hell not. But I can see things shifting, and I know how consumers think, and I can see that they're gravitating to shows like this where they get not only informed but entertained, and that's hard for other people to do. They're gravitating to sites like Rate Hub, which are at the top,
Wawa.
Yeah, he's done an amazing job.
Huge job, big job.
Who are at the top 3 of Google for keywords like best mortgage rates, Canada, stuff like that. They're gravitating to good content, but I think again, content's going to come under pressure long term. What's going to be interesting is to see if regulators force the search engine companies to attribute where they're getting some of this mortgage data, or any data for that matter, from. So if you go on ChatGPT and the Microsoft version, for example, and you type in who's got the best 5-year fixed mortgage rates, it's going to spit out some information. And it's not always that obvious to see where it got that information from. But it should be, because it's basically freeloading on information on the net. Because Microsoft doesn't have this big database of mortgage rates.
No, it's just pulling from the net. Yeah.
So hopefully they're forced to show at least the best, and I think I've seen some applications where they do this, the best sources of the information that they're giving you, so that you can easily click on it. And then, but again, you're not going to see 100 results. You're going to see like maybe the top 5 results, and that is to say that it's going to get tough for those people trying to sell mortgages on page 2 of Google and beyond.
Yeah, I agree 100%. So switching subjects a little bit, what would you say, because I've been thinking about this for the last 6 months, but would you say that the banks, who, let's face it, in this country, 87% of all financial transactions devolve back to the big 6 banks in some way or another. Either it's the money, either they were the money behind it, or they were the
direct or indirect funding,
all that. So would you say the banks have gotten better at mortgage pricing and being sharper on their mortgage offerings than ever before? Would you say that's been an outcome of the last couple of years?
Well, they sure have gotten better at keeping uninsured competitors away.
Yeah.
On the insured side, they gave up that market a long time ago, and government-sponsored securitization helped significantly open up the insured mortgage market. But on the uninsured side, I mean, there's some, I won't name names, but there's some lenders that have been in trying to get uninsured funding here for 6 quarters, and they haven't got it yet. So it's the banks hold that very important key, and uninsured funding is whatever it is, 4 out of 5 mortgages or so in this country. So for these online entrants, these disruptors, as they like to call themselves. For them to make a huge dent in market share, they need low-cost uninsured funding. And, there's only, half a dozen sources of that in Canada.
Which are not interested in competing with themselves.
Yeah, big sources, that is. There's a couple of credit unions and stuff, but they're immaterial.
But they're not interested in competing with themselves. They're not interested in if they're going to offer the very best rate that they can put out to the public. They're going to make sure that the people they're supplying the money to aren't going to be beating them. So on the uninsured side. But the question I was sort of thinking of is that if you compare like even 5 or 6 years ago to how aggressive big banks were on pricing consistently to where they are today, would you say they're better than they were?
In terms of
sharper
better
pricing,
discounting?
Consistently better discounting, better pricing.
Yeah.
Okay.
And that's been forced on them by more competition, from not only electronic entrants, which are really a small part of the market, but from the HSBCs of the world. Soon to
be amongst the dear departed by next year.
Yeah, that's going to be interesting to see what the Competition Bureau does there. I mean, the odds are that deal's going through. There's a lot of rumblings that RBC might keep its broker division going.
Are the rumblings coming from the people who are currently part of that broker
people who are trying to make rumblings?
Yeah, that's right. Yeah,
I've actually heard it from different sources, but maybe they got it from those people. But I mean, that's RBC doesn't want to put its broker brand or its bank brand in the broker channel at this point.
No, they don't.
And I'm not sure that's going to change.
I'm sure it won't change.
If they were to do something like that, maybe they rebrand it. I don't know.
But they like to make a little bit more money than HSBC could live with. They like to make a little bit more margin on their mortgages than HSBC, I would think. So, yeah, it's yet to be seen. I mean, let's face it. Every bank considers using the broker channel because it's a tap. When you want volume, you can turn it on. You just have to alter pricing a little bit. And you can turn it on like a tap. And sometimes it turns into a fire hose of business, like our friends at TD discovered. And I mean that seriously. They're my friends. Okay, Scotia's still my friend, but and probably always will be. But the reality is that these guys have done a hell of a good job, and we'll see what happens when BMO finally gets up and running. But that was the best way that people described it to me. Banks described it to me. Ron, there is a certain magic in turning on a tap that's a fire hose. Yeah, if we want
RBC
volume,
should be in the market. RBC should have, even if they
off-brand it.
Off-brand it. They'd be crazy not to. Because again, you're going to have times when you have an economic downturn, and why would they want to just give away that volume to a Scotia, TD? If they can put under a different name and save their brand.
Okay. So you mentioned a couple of things you might be thinking it will impact on the mortgage brokerage side in a sort of a systemic way over the next couple of years, and I think you're spot on in those things. But what's the next 12-month challenge to the broker channel? What do you think for mortgage brokers? What are they going to be faced with over the next 12 months?
Path of rates, certainly. The unemployment rate. Those are the two big ones.
If that recession hits, if there's legitimate unemployment, that could be a pretty big blow to the mortgage brokerage industry.
Yeah, I think it's going to be less of a blow than in the past. I mean, Trudeau has already pledged to, send checks. If more checks, If things get really bad,
more money.
Exactly. I don't believe that this recession, if we get one, is going to be as bad as in the past. The there's always the black swans. Let's say that things get really bad in Ukraine, China does the unthinkable. There's and invades Taiwan.
Talk
there's
about it all the
another
time.
pandemic.
Always
blah blah
talk
blah.
about
There's
it.
just things that no one can predict. Barring those things, that I think that the unemployment rate maybe in the past maybe it's gone up 3-4 points in a typical run-of-the-mill recession. Maybe it only goes up, 1.5, 250 basis points this time around. That's not going to drive arrears to the moon. It's not. I don't even know if it'll take housing below its most recent lows, the average home price. But it will. There's going to be some weakening in housing, and that's going to hurt the mortgage business.
And I would completely agree. So I'm going to go totally off topic, but I am interested. I'm interested in this is some cultural subjects really interest me, and I have a chance with you to ask you a question because you're a Canadian who's also an American, if I recall correctly.
Right.
You've spent a certain amount of time in the States. You're back down living in the States now, although I know you come back to Canada quite often. So you're in Florida, and a particularly nice part of Florida. You're in Naples, which I've been to. It's a terrific place. A lot of Canadians holiday there. What would you say but you spent a lot of time in Toronto. You spent time in Vancouver. You understand this country very, very well. What are the big, and Canadians, when we talk about Florida, because people are always saying, well, parts of Florida, there's houses are so much cheaper. And yeah, I guess so. Like in Tallahassee, the house prices are probably one hell of a lot cheaper. Is that a fair statement to make, like in many parts of Florida?
Oh, yeah. I mean, you want to live in the interior and pick straw your teeth, you're going to get a nice house for $200,000.
Exactly. So there is and it's a big state. It's a very high population state. I think it's the second or third biggest population. No, it's third after Texas, right?
I don't know what it is, but it's definitely
California,
top 5,
Texas, top 5. Okay. So what is the key cultural differences you notice? I mean, what is the key? You live there, you come back here a lot, you've lived here a long time. What are the big cultural differences you notice between living in the United States and living here?
Well, it's like in the U.S., it's like government, get the hell out of my face. Here, it's like, when is my next support check coming in? The Democrats down there, and now we're getting political. I'm not going to get myself in trouble, but they've, brought the country a lot more to the left in the current administration. But it's just no comparison between the U.S. and Canada in terms of openness of economic policy.
And is that also the reason why we see it's so much easier to build a new subdivision in the United States? Is that
sure as hell costs a lot less,
right? Yeah. A lot less red tape, a lot less of everything. Just build the house, just build, baby, just build. Okay, that's like, what you notice.
Your friendly municipality is not taking $200,000 to put up a single family home down there.
Yeah, 31% of the cost of a brand new home today in Ontario is government related.
Yeah, I mean, it seems criminal, but that they would get their pound of flesh one way or the other if they couldn't do that, or
particularly if they're afraid to raise property taxes. Yeah. Okay, so you would say that that's the thing you notice the most is that it's a freer economic society. Is that a fair statement?
Yeah, and it's more every man for himself. Less of a safety net. I mean, there's certainly some downsides of the U.S. compared to Canada in terms of, let's put it this way. If your income is, less than $50,000 a year, you do not want to live in the United States of America.
Got it.
Yeah.
But if
you want to live in Canada.
You want to live in Canada. Okay. But, for those people who are fortunate enough to have family income over 100,000 might be better.
Well, let's put it this way. If you were a Canadian paying, and you're making $100,000 a year, you're going to save a material amount of money by moving to the U.S. if you could.
Yeah.
And people talk about, the healthcare is expensive.
Right. That's what they say consistently. When I talk about living in the United States, I get two things endlessly. You're going to go bankrupt from the healthcare, and someone's going to shoot you within the first 6 months. So that's what I hear every single time I comment on it on Twitter.
Yeah. There's a lot of people carrying guns down there in Florida. I will say that. But in terms of healthcare, so I'll tell you straight up, I pay my wife and I pay $550 a month.
$6,000, $7,000 plus a year. Yeah.
For good health insurance.
Yeah.
And if I break my leg, I'm not sitting in an emergency room for 4 or 5 hours, right? There's actually, you go down the highway there and there's actually billboards that say, we can see you in an emergency room in 6 minutes or less. Imagine that. So if you compare that cost to what you pay in provincial tax, just as an example, in Canada, and you make a lot of money. It's just, you can't even compare. It's just, you're just way further ahead. And that worries me a bit about Canada. And the economic competitiveness for higher income earners in this country worries me long term, because money knows no borders, right? They're either, if they can't move someplace offshore, then they're going to find some way to shelter their income. And eventually not as much is going to get into the coffers and to the system as the government would want.
And it's not good for society for the leading edge people to want to leave. I mean, I put up a post about that not too long ago, that recent immigrants to this country, people who've got a PR card in this country, after a short period of time are starting to think, how the hell can I get to the US? This place is crazy. Like a bungalow in Scarborough is like $960,000, and the rent on a 1-bedroom condo is $2,900 a month. This place is nuts. I'm talking about knowledge workers coming from other countries to drive our tech industry. They're thinking, how soon can I leave? Yeah. I mean, this does not make sense to me.
This housing crisis is a serious economic risk, and I don't believe that they're making it better by letting in 500,000 plus people a year. I think you got to give the system time to catch up and build some homes. But none of this is to say that Canada is not a great place to live. I love Canada.
It's a great place to live. It's a great country.
Yeah,
absolutely.
And if it was about 30 degrees Celsius warmer in January, I'd be here.
Hey, listen, it's also it's a great country, but it's possible that it needs some fixes. I mean, I think that's true of a lot of countries, but I think that something as basic as the inability for young people, and we, as you well know, we traditionally have a 67, 68% house purchase mentality in this country. It's been established for so long. But if we are going to say to people, who are 29, 30, 33 years old, nah, unless your parents have a house that's paid for and can give you the down payment, no, you're not going to buy a house. You're maybe going to be able to buy a studio condo, and better make sure that you all become sterilized so you can never have kids, because you can't live in a 585 square foot condo with a family.
Well, you can kind of put a top on the crib.
Holy
right?
mackerel, man, oh man. But, but yes, agreed. 100%
agreed. Dining room table out of it.
Pulling the best people out of a country, the successful people, the people who drive the success of a country, pushing them to leave, particularly when they're late 20s and 30s, because of ridiculous house prices and untenable rents. It's stupid. It's dangerous. It needs to be fixed, and we are not seeing any fixing happening right this minute. That's for sure.
Yeah.
Okay, Rob McLister, thank you. We absolutely ambushed you with a podcast here. This will be the second time I've ambushed somebody with a podcast, so thank you very much.
Nicely juiced from my Timmy's coffee.
And let me tell you, what I said was not bullshit. Mortgage Logic, if you want to be a real professional, if you want to have deep knowledge in the mortgage industry, you better subscribe to Mortgage Logic. That's it. Folks, this is a special broadcast of the Angry Mortgage Podcast. We were much less angry. We didn't swear as much. I promise.
I feel like I should swear. Like, I'm not in the, thanks, Ron. That was one hell of a fucking kudos you gave me there earlier.
So you feel better already, right?
Yeah.
You feel better already, okay?
Yeah.
That's it. So absolutely. That is, but as we consistently promise, there will be so much swearing on the regular edition of the Angry Mortgage Podcast.
Bringing down the average.
We're promised to up the ante on the next one, with the sole exception of the famous "see you next Tuesday" word. We're going to load up every word that we can think of that's bad on the next podcast. Thanks, folks. We're out.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.